Hello everyone, thank you so much for joining us to the show. Please, if the sound quality is good, give me a thumbs up so I know everything is good and I can actually get us started. How's everybody doing? We have about 40 people joining our show. Really appreciate everyone coming in the show. I see some thumbs up coming in. So today we have a really special show for you today. We are interviewing Dash, and Dash was a member of BBT I think since 2019. He was a lifetime member. He joined PCT Bootcamp and really turned things around. I've shared his equity curve on my Twitter. Let me see actually if I can bring it up really quickly on my screen. Let's go ahead here. Yeah, so this right here, I joked about it and I said this is not a chart of a shitcoin or a chart of CPI. This is our guest today's cumulative R. So he's going to talk about his journaling, his process, some of the key strategies that he uses. So it's going to be an amazing conversation. Thank you so much for joining in. I just remember, by the way, today there is no Brian or Andrew, unfortunately, so I'm going to be running the show all by myself. That's the camera that is going to be kind of zoom in. Our producer is trying something new. So again, we're working really hard to make the show as good as possible. So let's get to the numbers. I just gotta go grab something really quickly. I apologize again. This is a live show, so we might have to run into a little bit of issues. Bear with me 1 second. If you can get my screen, Santiago, and I'll be right there. All right, okay, so let's get into the closing bell, the topics. So overall today, the market, a little bit surprising. The CPI numbers came out and we gapped down. So let's go to our trading terminal and take a look at how did the indices do. So, we gapped down. We were down about 1% up to 2% on majority of the indices. And then what happened was, I think as the market really digested the information, the stocks have started to rally. Like we all knew that the inflation is going to come in hot, and there are regression models that look at PPI and can kind of predict what the CPI is going to be. So a majority of economists knew that the CPI is going to come in hot. It was all about, is the core CPI going to continue to decelerate, and how aggressive is the Fed's going to get in their next week meeting. So we're going to talk about that. I'll show you kind of the updated probability rates for those as well. So it's going to be a really interesting show. And then in about 10 to 15 minutes, we're going to have Dash join our show. So it's going to be an awesome show. Hey Ravi, how you doing? Thanks for joining the show. Ahraba is saying you can do it, Artie. Yeah, so the reason I actually moved was I didn't have my questions for our guests, so I had to go and grab them. I wasn't prepared enough. But yeah, so that's kind of the market now. Moving around previous day close, a little bit indecision. Dow is the only indices that is negative. Same with IWM. So for those of you who are following my trades and are part of my newsletter, you know that I'm short IWM and I'm long VYM. And this is one of those relative trades that we talk about, which is based on, outperformance in one indice or one sector versus another sector. And you run this relative trade, especially in a volatile time right now that the market is very volatile. What you can do is you can really minimize your downside because you're long in one side and short in another side, and all you're betting on is that a spread. So they can be really powerful. Anyway, so let's get into the slide deck really quickly for today, the 13th. So let me make this a little bigger. So CPI numbers, of course, no question here. CPI came in at 9.1. Economists were expecting 8.8, so it came in a little hotter than expected. One of the key factors to take a look at is energy, right? So we know energy came in a lot hotter than previously. But again, the reason for that being, we know this is kind of a backward looking, not too much, it's like 2 weeks backward looking, a little backward looking mechanism. So we know probably the next print will show the energy prices has come down a little bit. So hopefully this will be the highest CPI we will see. And then after that, we can come down a little bit. But again, yet to be seen. Overall, in terms of the headline, it was the fourth straight month of headline annual figure that topped estimates. So this is also a record. In the last 20 years, I don't think we've ever seen anything like this. So another record again happening. This is kind of the bulk of where the majority of the stuff came from. So kind of the used car sales came down a little bit. It's been trending downward, and then it came a little positive today, but again, it seems like it's slowing down. Same thing on majority of stuff, of course, except for energy and food. And we see that even food came a little lower in terms of previous months. But hopefully things will start to come down. One other thing is, as traders, we're always focused on numbers and charts and patterns, and we want to see, okay, how are the charts doing, how are the patterns doing, and we kind of forget the real impact that it has on people's everyday life. Inflation really hurts people. So yes, we want to trade around these numbers and we want to come up with theses, but we never become kind of insensitive to the fact that, hey, high inflation is going to impact people's life, and nobody likes to see it. Same story goes with war. When we look at war and we're talking about how's the war doing, and how would that impact the commodity prices and this, and how can we trade it? Sometimes we become insensitive to the fact that, hey, it's impacting people's life. So Jay Ree in the chat is saying, I just have to say this is easily my favorite economic show. Good job, RD. Keep up the great work. Thank you so much. Yeah, definitely. Today was, we've talked about, having Michael Gadd on the show, and one of his favorite quotes is that, the bear market make a fool out of bulls and the bears. I bet a lot of people started shorting the market at the open because of the CPI numbers, and they got squeezed out. So what you really want to do, again, going back to what Mr. Shannon was saying, Brian Shannon was saying, is really focus on your risk management, look at the price action, don't try to make sense of these economic data, because the majority of the time they don't make sense, or they're making sense, but people are trying to explain what happened with the price action. So that's another one of those things. So, risk management is key in an environment like this. Let's go over to some other information, and then we're probably going to have Dash join our show in about 10 minutes. I'm almost done with the slides, and we're going to look at the market. Just to give you a little bit of kind of foreshadow of what we're talking about today. We're going to have a very detailed session today with Dash. He was generous enough to share his win-loss ratio, a lot of a statistic about his trade. So it's going to be an awesome session. You definitely want to tune in as he's going to explain all this stuff and what are some of his key strategies and what really clicked for him. He was one of the people that worked closely with John. John, if you're watching, shout out to you. We really appreciate all the hard work you do for our Peak Capital Trading Bootcamp. So in terms of inflation, so one of the key things when it comes to inflation, again, today I'm going to be all by myself, no Brian or Andrew, so bear with me. It's a little harder to run the show all by yourself, but just be a little bit more patient with me today. One of the key things that you want to look at as when you get the CPI numbers, you have to understand that the CPI is backward looking, meaning it's showing you what happened 2 weeks ago for the month of June. It's not really forward looking. So if you want to get an estimate of what the market thinks the overall inflation has to be, one of the key areas you could look at is the swap market. Or you can look at treasury, you can look at TIPS, so treasury inflation protected securities. So those are kind of adjusted, give you a yield, give you a return adjusted for inflation. So that's, again, one of those things that is really important. So when you look at the 2-year inflation swap right now, you can see it's hovering around the 3.5%. So the swap market is basically telling you that, hey, we believe that the inflation is coming down over the next 2 years to somewhere around 3%. Of course, this is still higher than what the Fed is telling us. Fed believes that we're going to come back to 2.5% in 2 years, but the swap market is saying about 3.5%. And the majority of the time, if I have to bet as a trader, I would bet on the swap market rather than the Fed. And another interesting thing that happened today, and we've talked about this, I want to go to Trading Terminal really quickly, is what's happening to 10-year, right? So you're seeing 10-year, which was hovering around 3%, now again is below 3%. It's at 2.9. So whenever 10-year comes down, that means the bonds are rallying. When the 10-year is coming down, that signals that Fed can't just be continuously this aggressive, and they have to start easing soon. So what all 10 years basically telling you is what the rate's going to be 10 years from now, right? What the Fed's funds going to be 10 years from now. And right now the market is telling you, hey, 10 years from now, the Fed has to start easing, right? So because after this week, our Fed's fund rate, I think, is going to be somewhere around 2.75 or to 2.5, depending on what the Feds do. So you want to really pay attention to this. You want to monitor 10-year really closely and see what the market is really telling you about economic growth and quantitative easing. I got some slides today that will show you some correlation between quantitative tightening and the market and what happens during those times. So definitely tune in. So let's go ahead and let me take a look at the chat. Some questions are coming. With this high CPI number, it wasn't expected for a market to short sell quickly. Instead, seems to have moved sideways. Yeah. So K-Shop, that's a great question, and there's two ways that I could answer that question for you. Is one of the things is, when you look at core CPI, again, the core CPI, this was, I think, 3 months in a row that the core CPI, so excluding food and energy, is coming down. So it shows that on a stickier part, whatever the Fed is doing is working, or whether it's the Fed's work or whether it's just growth is slowing down, naturally it's working. So that could be one of the reasons. The first few moments of the trade, or that sell-offs, that usually the algos, whatever the program is, but it seems like once people have started digesting the information, they started buying. That's one way of explaining. The other way is what Dr. Reed tells you, and Dr. Reed tells you don't try to make sense of the market in a bear market. You would think that equity should sell off because the CPI was hotter than expected, but it didn't. Just try to trade the price action. In this scenario, I would tend to side with Dr. Reed a little bit more. Hopefully that helps. Again, one of the reasons we do this show is to kind of provide clarification in any shape or form that we can. Let's go back to the slides. Again, we talked about inflation, core inflation coming down. We talked about the swap rate, which is coming down still. So the swap rate, I told you, it's usually looking at the tips that is expiring in 3 years, and looking at what the tips is telling you, giving you, versus what the 3-year treasury is giving you, and it's basically taking the difference of that, and that gives you your swap rate or inflation expectation in 2 years or 3 years. So in this case, you can see it's at 3.3. Credit default swap. So these are insurance on bonds, right? Anybody who has watched Big Short know about credit default swap. So these are insurance that you put on usually corporate bonds. The spread has increased dramatically in Europe. So again, we talked about recession in Europe, I think 2 months ago in our show, and we talked about how Ray Dalio is shorting Europe. Now you can see that the market is catching up as well. So credit default swap, which is a sign of insurance, is moving up pretty heavily in the European bond market. And I got a couple of more slides to go through here and a couple of things to talk about, and then we can get Dash on the line. So if our producer can maybe shoot an email to Dash and let him know that we're almost ready for him, it would be amazing. The last slide that I got, the last 2 slides that I got for today, is kind of the impact of QT and the global equity market. I think people will find a lot of value in this as well. So you can kind of see whenever we have global bank reserves going down. So on this side, this is the negative side, and this is the red line. So whenever global bank reserves go down, when do global bank reserves go down? This is really important. Global bank reserves go down when banks are getting rid of their cash. When do banks get rid of their cash? When they have to buy something. When are they buying something? They have to buy these treasuries from the Federal Reserve. So that usually happens. The reserves go down usually during quantitative tightening cycles, or QT. So you can see here the correlation. Whenever the QT is happening and bank reserves are going down, usually the world index kind of follows. It's kind of a leading indicator for what happens to equities. So again, another argument that there is more downside for the equities if you want to look at the QT curve. Again, on the right hand side on this chart, you're kind of seeing the same same story. So bonds and stocks both are getting negative inflows whenever QT is happening. So people tend to remove their cash from assets like bonds and equities whenever QT is happening, this red line. And of course, we've seen this in in my personal portfolio. If you're following me, I'm more than 55-60% cash, and I'm mostly just trading options and not taking any crazy positions because I understand the macro environment. This is the QT cycle. This is not a time to take excessive risk. Let me just, I believe Dash is on the line. Let me just make sure we don't have any more important stuff. No. So without further ado, thank you so much everyone for joining in. We have over 75 people who have joined our show. Definitely give us a thumbs up. And without further ado, Dash, welcome to the show. How are you?
Hey Adi, can you hear me properly?
Yes, I can hear you amazingly. Yes, how you doing?
Doing good. Thank you for having me.
Yes, absolutely. So I think our producer is trying to get your image and footage on the show. There we go. Yeah, so now we can see you.
Nice.
Yeah, so Dash, welcome. We are very excited to have you. Thank you so much for being kind enough to accept this. I know we've talked about this. Every time a member comes on, it's tough. You want to share your story. You have to reveal your R size and your risk and all that. But thank you for being so courageous and coming on the show. I'm sure our traders and our members really value your insight. Welcome.
Thank you. Thank you. I hope my journey helps other traders, new traders, and just to here to inspire other people. That's it.
Yeah, that's amazing. So let's get started. So kind of really briefly. By the way, thank you for sending me all those stuff. I was reviewing them this morning, and I can't wait for us to actually deep dive into those. And I think that would add a lot of value. But kind of briefly, let's just start with how did you get into trading? What year did you started? Give us a little bit of a spiel. What's kind of your background? What are you doing professionally, and why trading?
Oh, so I'm an electrical engineer by profession.
Nice.
I came to the US in 2014. I had no idea about trading growing up. I was always told that the stock market is dangerous. Never put your money in the stock market. You'll lose all of it. So I was very scared. But then I think in December 2017 is when I started dabbling in the stock market. I downloaded Robinhood.
Uh-oh. That's not good. Okay.
Buying stocks based on recommendations from friends. So
Oh,
again, not a good thing. No strategy, nothing. Just yeah, buy low, sell high. That's it. Following that. But then in January, I think in January 2018 is we had a small crash, a small tech
yeah.
crash, and I lost money in that. And I decided, okay, this is not for me. I need to at least go and learn as much as possible before I put a single dollar that I've earned in a really hard way. So let's just do that. So I spent almost the whole year just learning, just reading, just YouTube videos, and sim. And then I got a sim account with Thinkorswim. That's how I started.
Nice.
And I got Andrew's book. On YouTube, I found his videos, and through his videos, I got his book. That was a game changer for me.
That's
Um,
amazing.
surprisingly, so if you just go on YouTube or Google like how to trade, you'll find all these trade gurus who are saying, "Oh, it's easy. You just buy low, sell high. That's it."
Yeah.
Nobody is talking about, or they'll be like, "Just use my strategy. That's it."
Yeah.
I think Andrew is the only one who said that trading isn't for everyone. You have to have a specific mindset to be able to achieve the results that you want, right? So that's that. I like that about him. That's what got me interested. That's what got me hooked. And then back in, yeah, I think in 2018 November is when I joined BBT as a lifetime member. And rest is
That
history.
that's amazing. So, Robin Hood, we all know, we all started. We in Canada we have something very similar to Robin Hood. It's called Wealth Simple, and it's exactly gamification. I had one of my friends last year who started trading on Wealth Simple, and I kept warning him. I'm like, don't do it. It's easy, and just like in 2018, the Fed kind of crashed the market. Same story happened this time around as well. So you started with BBT. Were you kind of dabbling, or like, how was your area with consistency? What were some of the areas that weren't sticking around, and why kind of you turned into PCT, and what happened there?
Yeah, so from almost like ever since I joined BBD in November 2018, I actually went live with a small account. I still have that same small account with CMAG. I'm just growing that account. I haven't put any money into it. I just keep growing it. I went live in May 2019. The only thing is, I mean, I was doing okay. I definitely lost money. The first year, my goal was basically not to lose more than $5,000, and I met that goal. I still lost. I lost, I think, about $1,000. Right, not a big amount right now, but back then for me it was a really big amount. So, and then even the second year, I was like, okay, now I just have to be break even. So in the second year, I think in 2021, I was break even, but it was not the equity curve. The slope was not great. It was probably break even, or some days, some months I would have, really great days, really good R&R and stuff like that. But there would be this one day where I would lose everything, which, in BBT we call it as Hulk days, right? So I used to have those. And
Yeah.
I wanted to get rid of that. So my main motivation to join bootcamp was to force myself to put in the time and effort that this profession needs, and get rid of those Hulk days. So that's why I joined bootcamp
Yeah,
in this year, January.
that's amazing. And so you were kind of. I will get into, and I'm sure our members have a lot of questions. By the way, we have around 100 people who just joined us now, so people are joining in as well. So definitely use the chat function if there's any question that you want to ask Dash. Use the chat option. I'll make sure to answer your question. But so you joined the bootcamp. We're in the John team. So tell us a little bit about kind of what was like, what really clicked for you that you got rid of those Hulk days. Because when I was looking at your
Yeah.
stats, I realized you don't have those max losses day as much anymore. So, and you don't have a lot
Yep.
of strategy violation. We're gonna get into these details, but without giving too much away. So what were
Yeah.
some of the key takeaways?
So during boot camp, right, it forces you to think about who you are as a trader. That's what I loved about boot camp. You really have to think like, okay, who am I as a person? What are my personality traits? What am I good at? Right. So for me, that was, I'm very patient. So initially when I started trading, I was going into scalping strategies, and okay, I'll be like super quick, I'll jump in, jump out, and that's it. But that didn't stick with me for long. So during boot camp is when I realized I'm more of a trend trader. So I'm very patient. I can wait for the setup and all of that. It's just my issue was I was chasing the setups. I was at that time I was over trading when I initially joined bootcamp. So when you see the curve, what's happening is some days I'm doing great. I'm getting good trades, but the other days I'm forcing myself more and more to actually perform better. In the bootcamp, you're in a scenario where you're practically competing with others, right? You're practically competing with your teammates. You're practically competing with the other team. You want to show your best. So it also kind of gets to you, and that's the challenge that you have to overcome in boot camp, right? And not think about that, but think about what you are here to do. What's your goal? So I was struggling again for the Hulk days. So I had my one-on-one with John, I think on March 18th. The equity curve shows the date March 18th. March 24th is when I have the aha moment where John told me, just forget about everything and hold your trades for longer, right? You have a good setup, you have a good trade book, hold your trades for longer, get that 2:1, 3:1 ratio, and see what it does.
That's amazing. By the way, John is in the chat. He just joined us.
Hey,
So
John.
yeah, he's watching as well. So I just brought that picture, and it's so interesting because I think it was a few days ago where Carlos from our team also posted something, and is like, there's this, a trader goes through this path of, beginner's luck, and it goes up, and then reality hits, and then about to give up, and then find consistency. And it's so insane to me that this looks identical to that chart that Carlos shared. I don't know if you saw it. I'm gonna go find it. So
No, I saw the pre-market show today, and he brought that up, and I was like, man, this is so close.
yeah,
It's unreal. But
yeah,
yeah.
it's almost identical. A problem, and the first few boot camps that I was a lot more involved, I could tell in the beginning there's a lot of pressure on the traders, but the second half is usually when they take off, and they start trusting the system. So let's, since we're already kind of opening up the discussion, what are some of your key strategies right now? What are you working on? And tell me a little bit about, because you kind of said bootcamp helped you realize who you are. So tell me how your personality trait are kind of mix and matching with the strategies that you're picking. Because I could never trade Andrew's style personally. Like that scalping, that's not me. I have to read balance sheet, read income statement, read economic data, and then come up with a thesis. I can't just trade like that, right? And that's the beauty of the market, is whatever your edge is, you can find it. So walk us through your key strategies and how your personality kind of matches those.
So my main strategy is called the VWAP breakdown. During boot camp, I called it VWAP break. Now it's VWAP breakdown. Basically, all I'm looking for is the price to break VWAP with increased volume, increased price action, stay under VWAP for a minute or two. And the most important thing I'm looking for, which I think we'll cover in the journal section, is the 1 minute and the 3 minute 9 and 20 moving average cross. As soon as that happens, that's when I enter. And my first do take a partial, I will add when the price reaches back to VWAP and stays under VWAP. So that's, and then later on start covering at every either 2 hour, 3 hour, 4 hour, to however long it goes. If it comes back, I'll get out at break even. So that's one of my main strategies. That's my kind of edge. The second one I'm working on is the exact opposite of this, is the VWAP break up. That's literally going to be, you just invert the image and you'll get the VWAP breakup. But obviously, there's some criteria to that as well that I'm currently working on. And the last one I'm working on is the ABCD, simple
ABC.
ABCD on the long side. Yeah, but I look for specific volume profiles. I look, for example, I have 5 different volume profiles that I keep track of. If it has what I call as a type A volume, which is a 3 bar rising volume, and the price is above VWAP, above the moving averages, that is, and also the retracement is between 50 to 68% on the Fibonacci, that is when I'll get in. So this is all
How,
journaling.
we're gonna get into it, and thank you
Yeah.
so much for providing all this stuff. How are you kind of your profit taking, and kind of your risk to reward? I know your risk is still pretty small, but kind of walk me through. Are you taking more risk on your A setup, like when there is a VWAP breakdown? Are you taking more risk, or you have kind of a confined risk? And then how's your profit taking throughout the way?
So when I actually started trading, and even the first few weeks of boot camp, I used to have different risk parameters, in the sense like, okay, if I like a particular trade, I'll put more money into it. I'll take, let's say, so right now, and I don't mind sharing this, but my risk is literally $25 per trade, right? So it's a very small amount for a lot of people, but for me, it works. And I keep on growing it. I started with $5 per trade. Hopefully for beginners, even that had like hotkeys for $25 risk,
Yeah.
$20 risk, $15, $10, stuff like that, depending on the trade. The only reason I stopped doing that is because it would mess up my overall like PNL and stuff like that. Some trades where I'll risk $5, that trade will do a lot better compared to where I would do $25, and that trade would not do better. So I would always get into the mindset of, oh, I need to chase this, right? So I just
Yeah.
stopped that and just used one. Just I started with, okay, I'll just start with a $15 per trade risk and slowly increase that, and that has worked. I'm constantly increasing. Every 2 weeks, I'll go back and see how my trades have been. if my equity curve is positive. This is also included in my trade book, where if my equity curve has been positive for the past a week or two, then I have to bump up the risk. So eventually I want to get to like $100 per trade risk. That's where I'll be comfortable with. I think Thor even does that. If he's comfortable with $100 per trade risk, I think I'll be more than happy with that. That's it.
Yeah. No, that's exactly right. And you know, it's the Andrew was kind of a part-time trader, I think, all the way until 2019. And the premise of it is, hey, if you can even make $50, that's an equivalent of extra hour at your work that you just gained, you know, or $60, and you're doing it on your own terms, and you're your own boss. So that's one of the things we focus on. It's very interesting because when we interviewed Anya, I think about 2 weeks ago, she was also, her mentality and her trade book was also very similar to yours. So she would look at her equity curve. If she's consistent, she would up the R a little bit. If things get messed up, she would dial it back a little bit and then continue to do it. And you know, it's something about kind of really understanding your own psychology and working. So I got your, after the boot camp, I got your cumulative R curve up, and so you, a little bit area of, you know, one of the key things here is I want everyone to take a look at on a down days. These are not wipe out your account days, so this is important. You can bounce back from these, but you can't really bounce back from something that is like 20R in one day all of a sudden. So that's also very important. Dash, let's get into your journaling because you shared a lot of. Okay, we got some questions coming in, so let me ask those first, and then we'll get into journaling. Bahana is asking, where is your fixed risk at now? So what is kind of what are you
25,
risking? He, he,
$25 per trade.
he's at 25 per trade currently. So I was looking at your VWAP breakdown analysis that you sent me. So this was really interesting. So losers were about 50%, winners were at 34%. Kind of walk us through it and say why, even with this mixture, we're still consistent and the equity curve is still moving higher.
Simply because I let my winners run now. That's it. That's the best answer I can give you. Uh, I have about, so I looked at my data, and the simple thing was I had to make anything above 1.5 hour per trade to be able to be profitable. So I kept my target as 1.75. So no matter how I trade, it doesn't matter where I take partials, even if I take partials or not, as long as I'm making 1.75 or higher on the trade, I'm going to be profitable. So that's why, and that's why I shared this with you, is to enforce how important journaling is. I would have never gotten to that number, to that realization, without capturing all that data and going through my journal and, you know, saying that, okay, this is what my target needs to be per trade. Doesn't matter how the trade works out. I'm not looking for 10-hour, 15-hour trades every day. Sometimes I'm just looking for a 1 hour day. That's it. Yeah, I think yesterday I just got a 1 hour day because it was a choppy day for me. I didn't find any good.
Yeah, I'm hearing a little interruption. I think I lost you for a moment there. I
Oh,
think I lost you right at where you said yesterday was a 1 hour day for you because it was a little choppy market.
yeah. Well, I was saying that yesterday things didn't set up for me. I didn't have a lot of revab break setups
Right.
happening, especially during the time that I trade. So
Yeah.
I was happy with getting a 1 hour yesterday. That's fine. As long as you're profitable overall, your equity curve is going up. It doesn't, for me, it doesn't matter like what is your, you know, risk to reward exactly. As long as you manage your trade properly and you're getting your target for, or your target R per trade. That's it. How you partial doesn't matter.
Exactly, and this was again looking at these data. One of the key things that really stood out to me is like, hey, losers are higher, but he's still profitable. How is he doing it? Letting his winner run, and this confidence level. How are you measuring this confidence level? Is it based on your trade book? You know, prior to going into the trade, you're taking a look at.
So it's more of an intuition kind of thing, that how am I feeling while going into that trade, right? Especially, and it comes down to the number of indicators and confirmations that the trade has met. If it, so I have like 5 indicators and 5 confirmations for the VWAP breakdown strategy. So if all of them are met, then I have a very high confidence. I mean, my maximum confidence level will be 90%. If I have 4 and 3, then it'll be probably come down to 75 and then 50. And so, but when I first started, especially during boot camp, I would still take trades where I had 25%, confidence level. So that wasn't good. So now I stopped doing it. If I'm even a little bit iffy about this particular setup, I won't take it. So now most of my trades have a confidence level of like 50% or higher.
I love that. I love that. So I'm into the next slide right now, and this is the one that you're showing kind of your strategy violation by month, and there is this massive drawdown from February going into July. So walk us through this slide that you sent me as well, like some of the key areas. And I love how this is a definition of proper journaling, like how detailed it is. And also one of the questions in the chat is, between what hours do you usually trade?
I will start trading. So I don't trade the first 5 minutes. I'll never trade the first 5 minutes. That's actually a strategy violation. It's part of that chart.
Yeah,
Um,
I saw that early entry before 9:35. Yeah.
Yeah, so I won't trade there. But then after that, I'll trade till about like 8:30. So I'm based in California. I'll trade about like 8:30 in the morning Pacific, 8:30 or 9. If I do end up getting a long like a trend trade, I'll set up my orders and just leave. So thankfully, I mean, I work from home most of the time, so I can still keep an eye on it. But if I have to go anywhere, I'll just place my orders and leave. That's it.
Yeah, so I'm looking at the strategy violation right now on this slide, and of course you got early entry, and then you got early exit. So how are you combating that? Like, how do you? And it's one of the things, by the way, I'm struggling with as well, right? Like, how do you go? It's a great that you're journaling it, but how do you go after math and then review it, and what are you doing to kind of bring that thing down a little bit?
So early entry is the most tempting one when you're in the chat room and Andrew has already made $1,000 in the first 5 minutes and you're sitting there and you're like, okay, I haven't taken a single trade. So that one takes a lot of like um, mental strength to overcome. So I literally mute the chat room one for the first 5 minutes at least, or just meditate during those first.
Love it, love it.
Watch list ready. I have everything ready. I have my stocks ready to go and everything. They're all set up on the screen. But I just won't look at it. I just won't look at the screen for the first 5 minutes. So I do meditate every day in the morning, sometimes 5 minutes, sometimes 10, 15. So I'll just overlap that time so it doesn't affect me. Right? So, and then I'll come back and even then I'll take my time to analyze, okay, what's going on. And then probably my first trades are around like 9:45, sometimes like 10 or 7 my time, 7 a.m. my time.
Yeah, that's amazing, and that's one of the perks of working at home. By the way,
Yeah.
you get to have one of the screens on the side while you're doing your job and monitor the trends. Another really interesting thing. By the way, someone's asking, how are you populating these data? Are you using any software?
Google Sheets.
Oh, it's all
Google
Google
Sheets
Sheet. You're all doing it yourself.
is
Amazing.
free
So,
stuff. Yeah.
man, love it, love it. So I know. I also noticed in February down to like June, we had a massive drawdown. Your grades. Can you walk us through that a little bit as well, and what's your process and thinking?
So the a small caveat to that is actually a lot of the criterias and the what we call the trade criterias in the sense of my confirmations, my indicators, and my entry criterias, and all of that were not. They were created during this period, right? So if I had to go back and analyze my trade, I think I created them in February. So I went back during boot camp. I went back and looked at all of my previous trades and then graded them, and then started working towards taking trades that would only meet my criterias that I've set up. For confirmations, I have 5. For indicators, I have 5. I think for entry signal, I have 5. For profit taking, I have 4. And for for risk management, I have 4. So these are the 5 main points that need to be met for me to even click on click anything on my keyboard or mouse, right? To take any
I see.
actionable things. And based on that, so five if all five for example, if all 5 confirmations are met,
It's an
then
A
I will
plus.
rate it's an A plus
Got it.
for that
For
category,
that trade.
or I rate it as a great confirmation category. And then if I get a great across all 5 categories, then it's an A plus trade.
Amazing.
So an A plus trade has to be great across all segments, all 5 of these. So it's not easy. So the thing is with this, the number of trades went down considerably, because I
Yeah.
wouldn't find setups that would meet all of these criterias, right? If you're not finding setups that meet, if you're not ever finding setups, that also means that maybe your criteria are too strict, so you have to
Yeah.
loosen it and work on it. But I would probably find just 1 or 2 setups a day. Sometimes I would find like 4 when the market was crashing hard, everything was going down, so VWAP
Yeah.
break was working perfectly fine.
Perfectly. Yeah, that's actually a great place to ask the next question. And I think this is one of the things that gets a lot of the traders is different market regimes. So like if you're a trend trader, like let's say you're a long only trend trader, you had an amazing 2021, but 2022 is a choppy market. It's a whole different market. So you have these 3 strategies, but are you actively looking to add more strategies in case a new regime comes in the market? Like let's say we start getting bullish again and you're not going to find a lot of VWAP breakdown. Are you kind of looking at different strategies and continuously adding to that trade book? Or no, you're kind of focused on just these 3 strategies for now?
For now, just these 3, but I think yes, for sure, if the strategy look into what the data is suggesting, right? But I'm not actively looking into adding new strategies. I think my edge right now is the VWAP breakdown. I want to make the ABCD my edge next, so that's what I'm focusing on. I'm collecting data on that. So, and I for the VWAP breakdown, I think I have about 250, 300. So even that's not enough data. I think Peter says that you need at least 1,000 to 2,000 trades on one strategy for it to be, really good, right? For the data to be convincing. So I'm still building, still modifying my trade book every week. Once a week I'll sit down and go through my trade book and analyze and see what I need to change here, whether I'm following or not. In terms of strategies, VWAP break, even though I mean we have had bounces recently, it's still I can still find trades that meet it. It's just about how I manage that trade to get my R&R, where I place my stop, where I take my profits. So I can still make it work. But for the long side, I do want to, that's why I said I want to work on the VWAP break up and the 1 minute ABCD.
That's amazing. Are you using scanners as well, Dash? Or no? No, you said
Not
no
actively.
scanners. Yeah, not actively.
Yeah,
So
not actively.
I got some good news for you. So one of the things that we're working on Trading Terminal is adding a scanner, and we're almost ready to launch. We're working really hard, and one of the scanners, one of the things we're scanning is VWAP breakdown. So hopefully that
Thank you.
should, yeah. So hopefully that should be ready. I mean, the deadline we have for our developers is next week, but let's see. Hopefully it should be ready
Thank you.
within the next few months. So it's going to be amazing.
And I also wanted to plug in the stock simulator. The
Oh
stock
yeah,
simulator that you have, that helps literally accelerate your my at least it did for me. I would spend like 2 3 hours on the stocks simulator and just go back and just form like that doesn't exist anywhere. A new trader or even experienced trader should definitely use that.
Yeah,
100%.
that's amazing. And by the way, we're working really hard. I appreciate you saying that, and I got to give a huge shout out to Amen and Megan who are producing those homeworks for that simulator as well, and they're doing a lot of hard work. Speaking of Megan and Amen, let's get into BBT mods. Is there any mod that you kind of resonated with the most in terms of the style of trading, and how much do you think kind of understanding your personality
It's
is important in trading?
it's going to be a mix for me. I took a lot from like different mods. For example, from Peter, I took the mountain pass, right? So the
Yeah.
VWAP breakdown is based on the mountain pass strategy, right? Obviously, John, I took the discipline that he gave me through.
He's
He
amazing.
has, yeah, he's a mentor for me, and he's whatever I am today is, you know, because of John. From Thor, I take the whole, you know, trend trading kind of thing where he goes his R3 to S3 or vice versa kind of thing. So I take that from Thor, right? So a lot of things from Dima I took. So Dima was the one who taught me that, or at least told everyone during the boot camp how important meditation is. So that's why I started meditation.
Oh, that's
So
amazing.
it's like small things from every moderator.
Man, that's amazing. That's great to hear. Dash, one of the other things on Monday when we were talking together and kind of, I was getting to know you and your story to kind of prep for this interview today. You were talking about the Thinking in Bets book. Can you tell us a little bit how that book helped you looking at probability?
I think that book is one of the best books I've read that does not mention trading so So the most important point that I took from Thinking in Bets from Anne Duke is the two types of mind, right? So you have a reflexive mind and you have a deliberative mind. So the reflexive mind is the majority chunk of your brain, which, you know, is also part of your evolutionary parts of the brain, your cerebellum, your basal ganglia, and stuff like that. The main parts, right? The deliberative mind is just a thin layer of your prefrontal cortex. Now, the way I think of this in trading is when you are ready to take a trade, when you are early in the morning, you are just about to enter a trade, you already are under a lot of stress. You are either you just woke up, you have all these different types of noises going. Everyone, Andrew is making money in the chat room. You know, Brian is making money in the chat room. He's going diddly doodly and stuff like that. So there's already a lot of stuff going on around
Yeah,
you, right?
yeah, yeah.
And that's not letting your prefrontal cortex, you know, take over. You're not making good decisions. So the way I thought of it and the way I wanted to get past it is trade book. Put everything in your trade book. Put if and then, if this happens I do this, if that happens I do this. Simple. You don't have to use your brain during trading other than deciding when you will enter. Once you enter a trade, that's it. You have everything written down, what to do when something happens, and follow that to the T, and you will be profitable.
Man, love it. It was a reflexive mind, and what was the other one?
Deliberative mind.
Deliberately mind. Love it, love it. And the trading is all about kind of being deliberate. And I love how you mute the chat. A lot of people think, hey, this is like a signal, like whatever Andrew does and whatever Brian does. Like there's been time that I followed Brian and I've lost money, right? And I've followed Andrew and I've lost money. Like if you get rid of that signal mentality and just focus on what it is you're doing, and just look at the chat room as a trading floor where other traders are trading, and you can maybe bounce off ideas but not really follow them. That's where things have started to change. Man, that's amazing. So I want to get into some kind of reflection points and reflection questions, and kind of bring this interview to an end. Is one of the things that I would say is if you could go back to 2017 when you first opened that Robinhood account, what would you kind of, knowing what you know now, what would you tell to your earlier self in 2017?
Man, if I could go back, yeah, that's a loaded question. But if I could, I mean, learn about trading first, learn what it is, journaling, trade book, building a trade book. All of these are what make a good trader, at least in my opinion. And it never stops. It never stops. It will always, even if I'm trading 10 years, 15 years down the line from today, I'll still be working on my trade book, right? And you can see Andrew is still working on his trade book. Peter still is working on his trade book. Maybe not to that extent what you have to do when you're starting out, but they still are. They're still making modifications to their trades, their trade books. Peter was mentioning how he has been working on reducing the gap between his entry and his stop, and just in the mountain pass strategy, right? So you'll always be doing that. So journal, right? I mean, yeah, if I had a time machine, if I could go back, I would probably give myself the lotto numbers for the next for next lottery ticket, or tell myself to buy Bitcoin.
My Bitcoin, yeah,
Yeah,
exactly. But no, that's amazing. The trade book, the journaling, these are a really important aspect. Is, you know, it really gives you kind of a window of who you are as a person. And this was one of the things that you said on Monday in our conversation that was really interesting. And you were like, this R to R and this risk to reward mentality, I'm taking it to my real life, and it's so amazing. Like, I want to
yeah,
buy a car, and I'm like, what's the risk to reward on this car? And that was hilarious that you said
yeah.
that.
Trade,
Yeah,
that's the thing. That's the other thing. Trading teaches you a lot of things that affect your personal life.
yeah.
You just have to be willing to learn, right? So it's again like, where am I putting my money, right? What's the risk to reward if I buy, a BMW as opposed to a Toyota Camry, stuff like that. So all of that you learn in your journey once you start this. That's all.
I'm 100% with you, Dash. I actually drive a Subaru, and no matter how much Norm trolled me on Twitter because I drive, I did the risk to reward, and I think it's a great car for the price I
It's
paid
a
for
great
it.
car.
It's a
Great
great
car.
car, man. So we're kind of coming to a close. So we have over 140 people watching the show, which is amazing. If you could give us a thumbs up. If you have a question for Dash, we'll probably have him for another 5 minutes. Use this time to ask your question. I make sure to, ask it here for you. What's kind of your advice for someone who is struggling with consistency, who's maybe just trying out? What are some of your key advice in this market?
If you're not already journaling, right, then start doing that. That's one thing for sure. If you're journaling your trades, go back, look at the data. Let the data tell you what you're doing wrong, if you're doing something wrong. Like, it's going to tell you. There's just no question about it. If you're collecting the right amount of data, if you just sit and analyze the data for some time, you'll see that, okay, I'm doing something wrong. At one point I just sat and looked at my screenshots of the trades. That's it. That's all I did. This whole, the criteria that I have right now, which is, I need the 3 minute cross, the 9 and 20 cross, that came from me and looking at, sitting and looking at just the screenshots from my previous VWAP break trades. I didn't have that till like criteria, and that was another game changer for me for that particular strategy. I just went back, looked at my trades, and saw what was the common thing that was missing, and I added that, started collecting data on that, and then it just made sense. So my suggestion would be, look at the data, let the data tell you what is wrong, if there's anything wrong, if you're not consistent. And the other most important thing is, look at your psychology. How are you approaching trading, right? It's, as John says, trading is 80% mental, rest everything is, technical and stuff like that. But 80% is just how you approach trading. What's your um, mental state when you're taking that trade, your psychological state and stuff like that. And
Yeah.
lastly, just don't lose hope in trading. Keep, perseverance is the key to success in trading. So don't give up. Learn, better yourself every day, 1% better a day, kind of thing. And that's
Man,
it.
Love it. So three key takeaway that Dash just let us know. Number one, start journaling. Look at the data. Number two, understand this game is 80% mental, so really focus on psychology. And number three, don't lose hope. Keep at it. Like that grit, right? Definition of working hard. That's such a great advice. One of the things that you said over there that I think it deserves a little bit more emphasis even is, sometimes people are making money and they're not journaling because they're like, oh, my P&L is my journal. No, no, no,
Yeah.
no, no. When you journal, you actually realize, hey, was it a skill or was it luck? You don't want to get fooled by randomness because, a lot of traders who made a lot of money in 2020 and 2021 are understanding this the hard way right now because they didn't journal, because they were just buying calls and everything was going up and they made a lot of money. Well, that was the Fed, right? It wasn't your trade book. It wasn't. That's the importance of, really looking at data. Man, I love it. You got a question coming in about how much time ideally would you recommend for someone trading in a simulator before going live?
Sorry, you broke up for a little
No,
bit. Can you
no.
repeat the question?
Yeah, so the question came in is like, how much time would you ideally recommend to try trading on a simulator before going live?
Till you are consistently profitable. There's no time limit. Till you are consistently profitable in the simulator, till you can have a positive equity curve, you have to trade in a simulator. And even after that, so this equity chart, uh, the bootcamp portion, we only get sim accounts, right? So
Yeah,
that all of
exactly.
that is sim.
Yeah.
So but after that is when I started slowly, I'm still slowly transitioning into live accounts, where I would go, okay, initially I did 1 day live, rest 4 days sim, right? And then just keep doing that till in your head there is no difference, because there is, other than your account number changing on the platform, there's literally no difference, right? Your performance should not change whether you're trading in sim or live. So get the performance you want in sim first and then transition to live.
Love it, love it. So no timeline, just get consistent. Man, Dash, you're amazing. You're one hell of a person.
Thank you.
You're so mature. The way you answer these questions, and I personally learned a lot from you. You're in the California area. I would love to personally see you in person. Hopefully, we'll do a meetup soon, sometimes in August. I know Megan's organizing one, but I would love to make it there and see you, man. Thank you so much
Thank you
for your
so much.
time.
I look
We
forward to
had
it.
you said you're gonna tell some of your family to watch this. Is your family part
Yeah,
of 140 people, or they're gonna watch later?
I think they're going to watch later, but I did see one of my friends. He was texting me.
Oh,
Then, hey, are you going to be on?
that's
So
amazing. Yeah, yeah. Anybody you want to give a shout out before we say goodbye?
Shafi's out there. I think you answered one of his questions too. The
Okay,
CPI question was his. So
amazing.
he's getting into trading as well.
Oh, perfect, perfect. That's amazing. It's truly an honor. Dash, ladies and gentlemen, that was Dash. Thank you so much again. Thank you for
Thank you.
being on the
Thank you.
show, and best of luck. You got my email. Anything you need, any type of support or assistance, you probably won't need mine, but please be in touch. I really
Thank you.
appreciate your time. Thank you.
Thank you.
Wow. So with that kind of brings our session to an end. I want to, before saying goodbye to you guys, I want to really showcase this equity curve, and it's really interesting. Again, make sure that this is when he was in PCT. So these are sim numbers, but kind of taking aggressive risk, getting lucky, going through these trials and tribulations, and then finally having his aha moment. And now that he's back in live, you can kind of see a very similar equity curve. And I want to spend some time on this as well. This is for his live account, and you can see a week of downward struggles, but it didn't wipe him out of the game, right? And he came back as stronger, and that's kind of shows you the fact that you got to take your exits really early. You got to understand your risk to reward. make sure you're journaling, right? He was journaling, looking at data, and he realized the minimum reward he has to get out of a trade is 1.75 R. And if he wasn't journaling, he would have never got there. It was an amazing session. We have over 130 people still with us. That brings this session to an end. We talked about CPI numbers. We talked about why the market kind of rallied. We talked about QT and what it means. Tomorrow we have the banks earning. Hopefully Brian will join us tomorrow and we'll run the show with him. And then next week Andrew will be back. Next week we have a guest, Jared Dillon, who was an institutional trader at Lehman Brothers, and now he's trading his own money. A really amazing guy. He was nice enough to join our show next week as a guest, so definitely tune in. We got some amazing guests lined up for you, and we got to make sure this show is better and more powerful, and we try to add value as much as we can. Give us a thumbs up, subscribe to our channel if you're not. You know, the more you like this show, the more time I buy, right, before Andrew cuts this show out and cut this whole thing out. So thank you for your support, and we'll see you tomorrow. Cheers.